Now, an Emeritus Newsbrief, I'm Lynn, Huston. Effects of a recession brought the markets under again today. The Dow lost 514 points, the Nasdaq lost 80. And oil on the New York Mercantile was the lowest of the year, falling $5.18 to $67. Merck Pharmaceuticals announced today it would lay off 7,200 workers between now and 2011. 40% of them will be here in the U.S. The company will cut management by 25%. Merck says it needs to save money to invest in research and development. And Wachovia announced the biggest loss in its history with third-quarter losses of $29.3 billion. Wells Fargo, which is buying that bank, says the loss was expected. Another pension plan has been taken over by Uncle Sam. The Pension Benefit Guaranty Corporation says the bankruptcy of Pope & Talbot, which makes lumber and pulp based in Portland, Oregon, had an underfunded plan. Pope & Talbot has 1,370 workers in the Northwest U.S. and Canada. A U.S. House committee heard from credit ratings agencies about A ratings being given to securities that were practically worthless. One agency owner blamed self-serving larger credit agencies.
Do some spot checks. Let's say they were going to fund 100 mortgages. Well, you don't have to check every single one, but maybe a handful to make sure that the properties were appraised properly. Check some of the documentation that is documented. Make sure that the mortgagees can pay the obligors can pay their obligations. And that hasn't happened. What has happened in the market is because of the dominance of the major rating firms, they've constricted what they view as their job, which might serve their interests very well, but has not served the public's interest very well. In fact, there's been a breakdown because the assumption is that if it's a AAA, it really is a AAA, that you've done what is necessary to ascertain that everything can be done properly, and that's not the case.
Meanwhile, the larger credit ratings agencies say that the Securities and Exchange Commission is ultimately responsible for monitoring the claims of firms that are selling the securities. And a study in the Journal of the American Medical Association takes issue with some of the reasons that emergency rooms are crowded. The study claims that statistics prove the uninsured patients are not the ones clogging emergency rooms. The study finds that although 17% of Americans are uninsured, about 10 to 15% of those going to ERs are uninsured. The finding that elderly and disabled on public health plans, such as Medicare and Medicaid, are among the biggest reasons, much of it because they claim they can't get in to see their doctor. The latest on issues and public policy at emeritusnews.com. That's an Emeritus News Brief. I'm Lynn, Huston.